Hey, real estate rock stars, welcome to the whole enchilada of real estate investing, the only podcast that serves up the full feast of street smart strategies to build wealth and take control of your financial future. I'm Lou Brown, and I've been in the real estate game since 1976, so I've learned how to make the whole plate worth it. Each week, I'll be dishing out creative financing hacks and proven systems that help investors build multi-million-dollar businesses. No fluff, just the good stuff, straight from the source. Ready to dig in and start making deals? Let's get to it. Welcome, everyone, to another edition of the whole enchilada of real estate investing with Lou Brown. And wow, today we have an amazing lady who has been there, done that, comes from another country. We're going to be able to learn some valuable things about what it's like to be an immigrant to this country and what it's like to do business in this country. Welcome, Vessi. How are you?
Thank you so much for having me. I'm great, very excited to be here today, and very much looking forward to our conversation.
Well, I love it. So tell them who you are and where you're from and all that good stuff.
Absolutely happy to share. I'll keep it brief, and we can definitely dive into each of the points further if as needed. But I'm originally from Bulgaria, grew up in a different place at a different time. It was always my dream to come and study in the US. And at the time, that was as of the time of the Iron Curtain. So very different environment. So at the time, my only option was to earn a full scholarship, and academics was really the path to making that happen. And of course, learning English. So I got to work, got that done. And I was very blessed to be able to come to the US many years ago. Like many people, I followed the traditional path of going to school, grad school, joining a large corporate firm. And that's what success looked like, right? That's what success was painted as to many of us. So I went down that path and very grateful for all the experiences and learning opportunities I had along the way. But there were a few events of adversity and maybe I didn't pick up the clues immediately. It took me a few years. But eventually I realized that I had been climbing the wrong ladder of success. And at that point, I decided to make a pivot. For me, that pivot entailed creating and growing a real estate portfolio. Initially, I was doing that on the side while working a full time W-2 job. And eventually, as of a couple of years ago, I was very blessed to be able to transition to that full time. And so today I advise family offices, family enterprises on due diligence, risk mitigation, governance, strategic initiatives. I also work with private investors, specifically those looking to start, grow, and expand their real estate portfolios and specifically apartments. So I advise them on the complexities of the deal structure and the numbers. And lastly, for those who are willing and eager and ready to take that next step to build a portfolio, I help connect them with well vetted opportunities in apartments.
Wow. So you evolved from a whole corporate world that's completely different from real estate. You jumped in, you evolved to apartments. Have you ever done single family or only multifamily?
So yes, I've done a single family, and then maybe one point of clarification I will make, which I think actually helped with my transition for a good part of my career, pretty much most of my career. I was actually a commercial lender. Now I did finance middle market global companies, but a good chunk of our portfolio was commercial real estate. All sorts of commercial real estate, owner occupied, commercial retail, multifamily was I would say probably the largest share of it, and then some special purpose properties. So from that perspective, I would say my professional career positioned me well to make that transition. Now, I did have the lender angle, but I didn't necessarily have the investor angle. As a lender, you look at the risks, the downsides, right? As an investor, you look at the opportunities and the upside. So, and it's important to have a balance between both. So when I first started investing, I actually started with single family homes. It was single family, then a duplex, then 11 units, and then I transitioned to syndication, so being able to do larger apartment complexes. So it was a very slow, very gradual, very incremental journey.
Wonderful. Well, that's definitely interesting and quite a nice evolution too. So now the deals that you do, you're a piece of that deal, right?
Correct.
Are you the actual syndicator or you work with the syndicators? What's your role?
Yes. So I work with the syndicators. I'm part of the management team. I'm not doing this all by myself. So there is a couple of us or a few of us on the management team. And so how I bring value to the team is really in a couple of ways. I'm based in Los Angeles, right? And while I'd love to be able to do this here locally, my primary investment goal and that of my investors is cash flow in addition to appreciation. So naturally over the years that pushed me to invest out of state, and so all of my investments have been outside of California. And because of that, I seek to partner with people who are based in those local markets, because I cannot emphasize enough the importance of having local boots on the ground. So they source the deal, and when they find it, they share the opportunity with me. I vet the deal, I vet the numbers. That's where one of my former commercial lender background comes to play. I share that opportunity with my investors so they can decide if they want to join me in or not. I invest in all of my deals. And then once the deal is closed, I am part of the asset management calls, strategic discussions, other decisions that are important to effectively execution of the business plan. So well, I'm not necessarily the one finding those deals. There are other ways I can add value in terms of numbers and diligence, as well as help connect investors to those opportunities.
I love it. I love it. So you have that skill that a lot of people are looking for. So how do you evaluate these multifamily deals that are found by these local finder people that bring them to you?
Mhm. Yeah, so I will start with people first, and that's actually a principle that I follow even as a former commercial lender. The numbers are actually the easy part, right? They're very technical, straightforward. Yes, there may be some gray areas, and I can comment on some of those as well. But it really starts with the people, and that's really the part that takes the most time. That is the most difficult, right? Because it's more of an art than a science. It takes
Yeah.
time because there are multiple conversations that you have with that lead operator to really understand how they think, do your values align, how do they operate, what is their track record, how do they communicate, and then make a decision. Does this align with what I am looking for and what I know my investors will be looking for? Because if you might find the most amazing deal, but a bad operator can run it down to the ground, and vice versa. You may find a deal in distress, or there may be a deal in distress, but a really solid operator can really take it to the next level and create a lot of value. So for me, it really starts with the people first. And then secondarily is the market. Again, just because I'm not local to the market doesn't mean I cannot really learn it and understand it. And we live in a day and age, especially with technology, right? When there are a lot of tools available to us, including going there, visiting the property, leveraging your local boots on the ground contacts. And there, what I'm really looking for and what I really try to understand is what are the key performance indicators for that market. And I can dive into some of those. Where is it trending? Where is it going based on the numbers that we have today? Of course, everything is subject to change. And why that is important is because understanding the market helps me understand the inputs that go into the financial model and the underwriting. And eventually, the outputs for projected returns are derived from these inputs or assumptions.
What kind of return are you looking for on deals like this?
Yeah, so typically these deals have around a 5 to 7 year horizon. So over that 5 period, I look for around 15% internal rate of return, which is like the overall rate of return, factoring in for the time value of money. In more simple terms, in terms of equity multiples, that would range anywhere from 1.5 to 2 times. So if I invest $100,000 over that 5 year horizon, I hope to make a $50,000 profit, right? If I'm aiming at that 1.5 times multiple. Of course, these are all projections and estimates, and I understand as investors, right? We all take risks, so none of these are guaranteed, but that's the goal before entering into a deal.
So it sounds to me like you are looking at more mature properties, more aligned with the marketplace, not a huge rehab with big upside that takes a lot of effort, but you're actually
Yeah.
finding value priced properties that you can just jump in and start making return on. Is that more your market?
That you nailed it. You summarized it very nicely. I'm not looking to take on ton of risk, and so that's why the returns are, I would say, probably more modest. But I'm okay with that, right? I like to see a good combination of cash flow and then appreciation, which is really coming on the back end through the creation of value. And those are not easy to find at all, especially in the current market environment. It's become more and more challenging for a variety of factors, which I can talk about. But again, I'm not in this for a day or two or a year or two. I'm in this for the long run. And real estate requires a lot of patience and a long-term mindset. So I'm okay with waiting for the right deal.
Well, they say that the truly wealthy are only looking for about 3% above inflation. So they're not looking for these high returns, guys. They're looking for just a little bit more than they already have because they're protecting this huge nest egg and
Yeah.
they want to protect the nest egg, but they don't want to put it at risk. So definitely, if you're just getting started, you can afford to take a lot more risk than people that are already there. And that's why investors love to work with people like Vessi because they've got the opportunity to put their money over there and let it work, but it not necessarily be at risk. So when you've got a good advisor like that, it helps a lot to deploy those funds and put them into good, safe quality assets, let's call them, right?
Yes.
So
Yeah.
you're not doing anything in the hood, you're not doing anything that's
No,
high
not
risk,
me.
not many murders in your properties. It's like
Thankfully, not so far. I mean, there's always the probability, right? But not based on
any anything can
the
happen,
yeah.
but we all know that and we're all faced with that.
Yeah.
So you also have another angle of building additional income streams on the multifamily properties that you're working on. What kind of additional income streams do you look at?
Yeah, so that's extremely important, right? Especially in an environment where maybe the rent has already been maximized based on the current market conditions. And so it's really understanding what the local residents demand and tailoring those services based on that demand. Now, you can add those ancillary services like whether that's valet trash or maybe additional dog space, lockers, and whatnot. I would say in the more class B properties are slightly newer, not necessarily brand new, right? But they typically serve, I would say, the gray collar clientele. In the class C space, where you're really working with workforce housing, resident base. In that case, it's a very fine balance, right? In terms of not only increasing rents, but the fees, but certain opportunities there could include billing back some of the utilities to it's not necessarily other income, but it helps offset some of the expenses. So these are just a few ways, at least for the properties or within my portfolio, where we've been successful to show both the top line and some of the expense
Some
line.
offload some of the expenses that normally the landlord carries that they really don't have to carry. I
Mhm.
figured that one out decades ago when I realized, hey, wait a minute, these utilities are based on dollars per head. And if you count up the number of people that are living in each one of the units and you just charge them per head, rather than, hey, if let's say you're in a duplex and the bill's $100 and each side pays $50. Well, that's not fair if there's a single
Mhm.
person on one side and four people on the other side. So I switched it around to literally it be a per head charge. And then the single person was only paying one fifth instead of the whole thing or half
Subsidizing
of
it.
the whole thing, right?
Yeah, subsidizing everyone else. And yeah, they're also, depending on the state and then county, that's something to really be aware of their local regulations. So, working with third party providers who can help set it up compliantly is also something very important to keep in mind, because sometimes people think of it as a profit center, and it really is not. Everything needs to be very regimented, documented, and you really cannot in those utility bill back situations in particular, you really cannot bill back the full amount. It's always a little bit less than what you're paying. So there's some nuances to that. But again, before taking any steps, we always consult with those third party providers, and they're pretty straightforward to tell us, is it a green light or a red light?
Well, I love what you said. I've got a book. It's called Buy, Hold, Sell. And it's cash now, cash flow, and cash forever is the
Oh, I
sub
love
headline.
it.
So, when we're thinking about what we're accomplishing in our business, right? How
Mhm.
do we get some money right now? And how do we
Mhm.
get the cash flow? And then how can we make a long-term income off that same asset for literally decades to come? And one of the things I discovered is, of course, landlording is the difference between the debt service and what you rent it for
Mhm.
minus expenses. So that's literally how much your profit is. And what we created is 25 profit centers over and above what a normal landlord gets. So I love your thinking around providing other services. We're aligned on that. In fact, I want to give you some additional value that you can use in your world as well, because I think it's something that when we look at our residents that are living in the properties, they're definitely spending money on things, and why can't we be the provider of those things? Well, we
Right.
absolutely can be the provider on those things, and we can get paid for that, and we can
Mhm.
get residual income every month off of many of those services. So that's one of the things that we filtered into our world is just providing other services and literally bringing thousands of additional dollars to the bottom line per unit every
Mhm.
single year. And so it's a fun thing that you really don't have to add that many more properties. You just
Right.
want to ratchet up the income off of each one of the properties you currently got. And so that's a good plan. I like that plan. And definitely something that an advisor like yourself, you can bring something to the table that others don't know anything about. And they just don't know how to provide that kind of value. That's a beautiful thing. Now, when you got into real estate, you also had a full-time job, is that right?
That's correct. Yes.
So how does it work that you can do real estate and have a full-time job too?
Yes, I think I read somewhere, maybe it was Alex or Mosik who said you do your 5 to 9, right, becomes your 9 to 5. And by 5 to 9, that means 5 a.m. to 9 a.m. and then 5 p.m. to 9 p.m. So there was a lot of that happening for a while, but I had a very strong why, and I was determined to make it happen. And it's not going to happen on its own, right? You have to take the time first invest in yourself, start with education. At least that's how I started any new venture or new project. To start with the education first to really understand, right, what you're getting yourself into.
Mm.
And then doing the work. You have to do the work. It's not going to happen on its own, but it doesn't have to be right 8 hours a day plus your regular job, which is another, what, 8 to 10 hours. You can start with maybe an hour a day, or 30 minutes a day. Do whatever you can. It doesn't have to be this gigantic step forward. I'm a firm believer in small but consistent and persistent steps. And also doing something you're really interested in and passionate about because I wish I could tell you it's a straight up journey, but unfortunately, that's not the case. Some days are up, some days are down. And if it's not something that you're passionate about, it's going to be very easy, right, to lose that momentum. And so yeah, for a number of years, I was doing that in parallel with my W-2 job without necessarily compromising, right, any commitments I had with my employer between the hours of it was more like initially 8 to 8. And then I reduced it 8 to 6 as I became more disciplined about protecting my time. So anytime I hear 9 to 5, I wonder where are these jobs?
Right.
I never experienced a 9 to 5, but good for you.
Yeah,
um
it's not real, is it? It's
no, no, no. And of course weekends, right? We also have the weekends. So it's a matter of where do I want to spend my time? And for me, it was a conscious decision. I'm going to invest now and hopefully have fun later. But you have
well,
to do the work.
it sounds like you put forth a vision for your future and a vision of what you wanted to accomplish, and then you were willing to do whatever it takes to get there.
Right.
And that's one of the important things for everybody to make that commitment that if you're not committed, it's not going to happen naturally. You have to make some sacrifices in order for that to happen. I remember telling my wife, I said, "Look, we're going to drive these cars until the wheels fall off. We're not going to go buy a new car every other year. We're not going to do
Mhm.
things like that because that's what the others do." And I said, You want to be in a position where you can literally go buy anything you want for
Mhm.
cash, and you don't
Mhm.
have to worry about all the keeping up with the Joneses or everything."
Mhm.
So we made that commitment early on. It served us very, very
Mhm.
well.
Mhm.
And it's been a wonderful experience over the years. So I love that you've had those experiences and you've seen the other side. Now, right now, you have not only focused on multifamily properties and not only working with syndicators and locals that are finding deals and bringing them to you, but you're also doing something else. You're teaching others how to do multifamily underwriting.
Yes, I love that you share that because over the past couple of years, what really prompted that and inspired that, I wish it was positive, right? But sometimes pain can be also a great catalyst. But I spoke to many investors over the past couple of years, and suddenly they got themselves into deals that perhaps they didn't fully understand or they trusted the operator, trusted the numbers presented to them, which ended up being more optimistic assumptions than realistic, right? And so suddenly I started getting a lot of calls, especially again over the past couple of years. And it's no secret, right, that multifamily and commercial real estate are going through its downturn as we speak. And many of these calls were, hey, I got a capital call. What do I do next? Or, hey, is my deal okay? And I kept thinking, okay, I cannot clone myself, but what I can do is hopefully teach people how to fish and so they can at least minimize the risk of loss, right? You cannot eliminate the risk as investors. We get paid to take risks. So that comes inherent with the investment activities that we do, but at least analyze it, understand it, determine on your own, not trusting someone else blindly, if and how that is mitigated, and then come to a conclusion on your own. Is this opportunity a good fit for me or not? And so, yes, I poured all the years of commercial lending and investing and created a more structured curriculum, which was really designed for the new investor, for the beginner investor, which is where I felt the biggest need was. Because if you know how to analyze the numbers, how to poke holes, you're pretty much protected, right? But as a new investor, you don't know what you don't know. You often don't even know what questions to ask. And you may even be intimidated, right, to ask some of these more technical questions because if you're not a commercial lender or Wall Street analyst, right? You feel like, oh, I cannot be an underwriter or I cannot learn underwriting. And my goal is to bust some of these myths, but also create tools that can help others so they can protect their hard earned money and their capital.
Great. So you're teaching others how to really, from the beginner standpoint, how to
Mhm.
get involved in multifamily properties. And definitely that's a springboard. We learned from Monopoly, you don't start with the multifamily properties. You start with just going around the board and
Right.
collecting up some deeds. And then you start building houses. And then when you got 4 houses, you can convert it to a hotel. And so it's, I think, a very valuable pathway for people to
Mhm.
take because, when you jump all the way in on the multifamily side, which I did early on in the game. I had done a few single families, and all of a sudden, I'm buying multifamily apartment complexes.
Yeah.
Like you said, you can make some mistakes along the way, and, I definitely learned a lot about low-income properties in bad neighborhoods and completely turning them around from start to stem to stern, start to finish. And then on top of that, having to deal with the government with the Section 8 program and,
Yeah.
all the management headaches that come with that as well. So I uh, I started early in my game, not started completely, but
Mhm.
early on, I did a lot of multifamily, and it's a fun thing that really now I focus on single families. And, we shifted our model to the path to home ownership, where we help deserving families end up with home ownership regardless of credit or financial background. And that's one thing that I use apartments for is as incubators for that
Mhm.
program on the path to home ownership. So all of my licensees that do have apartment buildings, I said, "What a great incubator that now we can grow these people up to eventually roll into houses that you can custom buy for them, and you buy them right, buy them cheap, buy them creatively, and then put that customer that you've already learned what character they have and whether they're going to pay or not and what they're actually up to in life, and then you give them an opportunity that they otherwise would not have with the traditional way that banking is done. And not a lot of people don't fit inside the banker's
Right.
box, right?
Right.
And, so the banker has this little tight box, and people have to fit in there, and if they don't, they're outside the box. So we enjoy being outside the box
Yes.
in our world. So with your multifamilies, that's another way that you can look at those as incubators for single family investing in the future too.
No, I love that you share that, and I love the mission, right? The why behind what you do, because at the end of the day, we all need to find a purpose, right? And I love how you said the path to home ownership, because that's creating impact. That's one way you leave a legacy, right? And a legacy is not just financial, right? It's who you help, how you impact people along the way. So I love that you share that.
Well, that was a surprising thing that I learned early on when I became a teacher that people, yes, they want to make money, but they also, as you said, want to make an impact. They also would love to have something that was not just about the money, but was also about making a difference in someone else's life.
Mhm.
And whenever you sentence people to apartment living for the rest of their life, well, it's not too much fun. And the magic was that I found out that apartments are full of people that don't want to be there.
They all own the backyard and the pool and
They do. Trulia did a survey and they said like 78% of the people they surveyed actually did not wanna live in an apartment. They
Oh,
wanted
yes.
to live in the single family, small multifamily environment,
Mhm,
and I said, "Aha, there's an amazing market right there
mhm,
of folks that maybe they have less than perfect credit, maybe they think they haven't saved up enough in down payment, maybe their score actually is good enough, but they don't know it." And so we attract people through our program to come into our world, and then we show them a true trajectory towards home ownership and while they're living there. They're literally going to buy the house that they live in or some other house once they get good enough credit, good enough down payment.
Mhm.
So that's another way all of you that are thinking about multifamily properties is definitely they can be wonderful income generators, cash flow, they increase in value. We know that through a thing called inflation is always going to be with us. Therefore, it's going to drive the value of the properties up. And so when you get a collection of property all together in one place, it's called apartment. And you can do quite well with apartments as we did years ago. And then you get into your other world. Now I'm doing condominium conversions and different other things that are also about housing and about
Yeah.
helping people on the path.
Yeah.
So it's a quite wonderful thing. Now, so what other message did you want to share with our folks today, Vessi?
Absolutely. I'm a firm believer in education because I believe that an educated investor is an empowered investor, and that's really the why behind what I do, the why behind why I created the community and the course, and the why behind I help consult investors so they can protect their capital and hard-earned money, and also the why behind the book that I most recently released. It actually went live yesterday on Amazon. And it's called Mastering Multifamily Underwriting. Not sure if that you can see it right here.
Mastering,
Mhm.
it's going in and out with the thing, so hold it a little bit closer,
Okay.
maybe. There you go.
Yeah.
Mastering multifamily
Mhm.
underwriting 5 steps
To
to,
confident, risk smart apartment investing. Yes.
yeah, baby. That's brilliant. Congratulations.
Thank you.
Congratulations. It's nice to be in the author world and
Thank you.
getting your message to the market.
Thank you. Very, very excited about that. And again, for me, it's all about impact and helping investors. And that's part of the legacy that I would like to leave behind. So definitely encourage anyone who is even considering, be curious, right? Start with curiosity, start learning, educating yourself so you can make the right decisions on your own, not just blindly trusting others, because what's right for them, right, may not be a good fit for you. Your criteria, risk tolerance may be different from what maybe your neighbor next door is looking for. And yeah, and believe that it's possible. Always believe and dream, believe and achieve. So that's I'm
Love that.
very much a believer in that.
Dream, believe, and achieve. Well, you've been awesome today, and definitely, how do people reach you?
Probably the easiest way to connect with me is on LinkedIn. That's where I'm most active on social media. Of course, for underwriting or anyone curious about that, mastering multifamilyunderwriting.com. And if people would like to learn more about passive investing in apartments, due diligence, and how to vet investments, dbacapitalgroup.com. Actually, D is in dream, B is in believe, A is in achieve. So my contact information is also there.
Oh, wow. That's fantastic. Well, congratulations on all that you have created in your world. You have really been able to kind of single handedly create an amazing business there. So you have accomplished a lot, and we look forward to hearing from you again in the future and keeping up with your wonderful success. Thank you for sharing.
Thank you so much for having me. I really enjoyed our discussion.
I love it. Well, thanks everyone for being here for another installment of the whole enchilada of real estate investing with Lou Brown. We will see you again soon. Yeah, baby. Thanks for tuning in to the whole enchilada of real estate investing. I hope you're feeling ready to take your investing game to the next level. If you're serious about building wealth, you won't want to miss the Millionaire Jumpstart. It's a 3-day live event that's perfect for any level of investor. Whether you're just getting started or you're looking to scale, this can be one of the final steps of making real wealth happen. So, what are you waiting for? Enroll now at millionairejumpstart.com and get ready to make big moves in your real estate journey. I'm Lou Brown. Until next time, keep hustling, and remember, it's not about how much you make, it's about how smart you play the game.